Hello, everybody. Real Estate Ninja here. I hope you're doing well. Blackstone has just made an announcement, and it is an announcement that is going to sway a lot of people. Blackstone is one of the largest fund managers on earth, and they just made an announcement regarding real estate REITs. I'm going to read a little bit about that. Then I'm going to show you something that's happened in the recent past with Blackstone and many other fund managers. And this is not the opportunity you have been wanting or waiting for. I'm going to explain that. And if you like things explained on a really basic level, because then it makes a lot more sense because a lot of fund managers, a lot of financial professionals like to make things sound really difficult, really hard to understand so that you'll pay them a lot of money and not make that much. Then stick around, hit the subscribe button and hit the bell icon. Okay, here we go. I'm going to share these stories. First story is out of, I believe, Seeking Alpha, and it's entitled Blackstone Calls Real Estate a Generational Opportunity. Now on the surface, that sounds really good right here, right? Let me explain. It says right now, the prevailing consensus in the market seems to be that commercial real estate and the publicly traded real estate investment trusts that own it are permanently impaired. Property values are falling, and high interest rates have made CRE business models unviable. But as is so often the case, this popular narrative takes the kernel of truth and blows it out of proportion into huge misconceptions. That's when it's helpful to hear from a real expert in the field, such as a portfolio manager at Blackstone, the largest alternative asset management company in the world. In what follows, we look at the top commercial real estate expert at Blackstone has to say about the sector today. Let me stop and tell you something. And this is the truth. I am the first person that I know of on the internet to warn about the commercial real estate crisis. And that was almost 4 years ago. Started talking about it before Evergrande went down in China and well before any expert at Blackstone or BlackRock were talking about it as well. And there's a lot to be hidden. First, I want to explain to you a REIT is a contract that you get a percentage of the cash flow after all expenses on a piece of real estate. A REIT does not own physical real estate. Okay. It is an intermediary that owns the rights to the profit. You have to understand that when all expenses are taken out, and especially the fund or portfolio manager's cut gets taken out, you are left with a very, very small amount. Now, right here, they're talking about how the commercial real estate is imploding. That is absolutely correct. It is in really bad straits. But right now, Blackstone wants to get ahead of this and raise more money so they can control more real estate. That's why they're saying this is a generational opportunity and that you need to be educated. But they're not going to tell you what I just told you. It says right here. Now let's talk about this big wig at Blackstone. Blackstone's global co-head of real estate, this guy, articulated the case for commercial real estate as a deep value opportunity. He says if you take a step back, we've had two really difficult years for commercial real estate, and there are really two reasons for that. One of those is historic increase in rates, which puts downward pressure on valuation multiples for real estate. The other thing is what happened is that office buildings have faced a lot of pressure, the combination that has been negative headlines and negative sentiment. That's absolutely not true. The office places changed forever now that remote working has come into the spotlight and people have got a whole new idea of what working abroad means. Um, we are seeing a complete shift in the markets. And because of worldwide inflation, the Federal Reserve must keep rates higher for longer, which is going to put even more future pressure on the commercial real estate markets. So let's do this really quick. I'm going to go to Investopedia, and it talks about Blackstone bailing. That's sort of weird. And where does this come from? Well, this comes from an article about more owners of distressed office properties simply choosing to walk away. And this was published June 27th of 2023. So only about what? 9 months ago, 8 months ago. So let's dive into the portion they cover with Blackstone. Surging interest rates have made refinancing those loans a losing proposition for office property owners. This year alone, the Mortgage Bankers Association estimates that 92 billion in non-bank office debt will mature. Borrowers will either need to refinance that debt, default on it, or sell the underlying property. Blackstone, the real estate investment giant, earlier this year raised $30 billion for its latest fund, has chosen to walk away more than once. The firm stopped making payments in March on both a $325 million loan for a Las Vegas office park it owns and a Midtown Manhattan office tower it bought in 2014 for $605 million. They just walked away. They just walked away. In addition, the firm reportedly has considered walking away from a $274 million loan it took it to buy in 2017 to buy club quarters hotels in Chicago, San Francisco, Boston, and Philadelphia. A special servicer over that loan in June of 2022 as travel halted abruptly during the pandemic. So now it's really interesting that they talk about these generational opportunities, right? Why? Because this guy right here wants to raise more money to be able to control more real estate and take a bigger piece of the pie, and wants to convince you how great this is. Buy the dip. Here's the problem. The dip hasn't even really begun. Yes, commercial real estate is in downturn and it's bad. We haven't seen anything yet. You see, the point being is that when you look at the Federal Reserve chart and you start thinking about where we are as far as interest rates, you would have to start to think about where the Fed's going to go next. And let's again push you to this chart. This is the Fed funds chart from 1955 till now. And can you imagine? Remember, I've said this before, I'll say it again. We are in the inflation style of the late 70s, this time right here. And the Fed had to start raising rates. And see how they paused right here in 1979? They thought they'd gotten it under control. But that pause caused a little bit more aggressive spending on the public's part, and they had to do this all the way up here. Then they had to drop it down because things were looking really bad. Oh, they didn't get it under control. They spiked it and dropped it again. I believe that you are going to see this happen right here in this area over here again. I know it sounds crazy, and I'm not saying that rates are going to go to 17%, but all they have to do is go to 10 or 12% to see a complete annihilation of the economy to get inflation under control. But there's more than that. This is what I want to draw your attention to. This portion right here, from the year 1999 till now. Remember when the Fed says that they have to keep rates higher for longer? Well, just so you know, that same narrative came out after I'd sold all my real estate. This plateau right here was spoken about all the time. Higher for longer, higher for longer, higher for longer. But that's actually a Fed trait. You see back here, they went higher for longer, because the dot-com boom was getting out of control. It was raising inflation as well, and they had to correct it until it broke, until, wait a minute, nobody likes to talk about this one, when it broke. And then all of a sudden, something came out of China. Well, I want to tell you something. This right here is about to break the markets. And that means the commercial real estate is going to be hurting even more. Because every month that the Fed keeps the rates up, more and more commercial real estate goes into distress because they cannot refinance it. We are in a very serious time. The question is, are you taking it serious? I hope you are. If you like more information like this, please stick around, hit the subscribe button, the bell icon. I really appreciate your time. The Real Estate Ninja is out.